fasten your seatbelts as the roller coaster ride on financial markets intensifies. In Japan right now, we are seeing a sharp rebound following the historic falls on Monday. In Tokyo, the main index, the Nikkei 225, is recovering some of the record-breaking losses when the Nikkei closed down by over 12% at the end of the day, marking the biggest one-day sell-off since Black Monday in 1987. So let's take a look at those numbers. The Nikkei 225 rose 10.23%. The Hang Seng there down slightly in Hong Kong, but nothing like yesterday's losses. The FTSE relatively calm compared to yesterday's results, and a stability there amongst the yen against the dollar. Let's have a look at how things ended on Wall Street as well while we're here. The benchmark S&P there down 3.05%. The Nasdaq down 3.5%. This is how it closed yesterday. We'll be having a chat later about how things might go for the rest of the day. Mariko Oy has the latest for us from our Asia Business Hub.
Well, what a roller coaster ride it has been for those Japanese investors. If you look at the points, the Nikkei 225 almost recouped all the losses it suffered yesterday, ending the day more than 10% higher after falling 12.4%. You know, yesterday was the biggest points fall on record, and today we had the biggest daily rally in history. So extreme volatility and definitely not for the faint-hearted. There's a sigh of relief, but it also confirms the view of some analysts who were saying yesterday that fundamentals are strong. Don't sell in panic because Japanese companies are doing well and the economy is quite resilient as well. Of course, yesterday's sell-off was caused by the sudden jump in the value of the yen, and it was dubbed the Ueda shock, Ueda of course being the name of the Bank of Japan governor, as the rate hike that he announced last week triggered the rally in the Japanese currency. The yen has stabilized somewhat today, trading at around 145 to 146 yen against the US dollar. Yesterday, it was trading at around 141, and when it was around 160, it was deemed too weak by the authorities who intervene in the market, spending $100 billion to prop up the value of the yen. Then, of course, came that rate hike. But even at 140, historically speaking, it is still quite weak. I still remember the yen trading at around 80 yen against the US dollar. So was yesterday's sell-off just a blip? I'm sorry to be a bit cliche, but we just have to wait and see.
Let's try and get a grip on what's going on with the chief market analyst at Scope Markets, Joshua Mahoney. Josh, thanks for joining us. Yesterday we were talking about a record dip, now a bounce back. Why was the shock so short-lived?
Well, it may not necessarily be so short-lived because for all we know, we might see another big sell-off tomorrow. The nature of financial markets is that we do tend to see things ebb and flow. And there's a feeling today that, you know, we've maybe overshot a little bit towards the downside in terms of dollar yen and in terms of the Nikkei 225. So both of them moving towards the upside. But the question mark here really is, has the recovery in the Japanese yen ended? Is this the be all and end all of it? I don't necessarily think so. We've had year upon year of weakness for the Japanese yen. And if we see significant downside to come for the likes of the US dollar against the Japanese yen, that by and large could drive further weakness for Japanese stock markets. And that starts to lead to contagion across the globe.
But Josh, something strange did happen. Traders had been taking advantage, we know, of Japan's low interest rate to borrow in yen and buy riskier assets. Others have been blaming algorithmic trading programs for this. Some just say it was a great buying opportunity, but this was highly unusual, wasn't it?
Yes, certainly the so-called carry trade that has been going on essentially means that people are borrowing in a very cheap jurisdiction over in Japan. They were taking that money to, say, the US and buying big tech stocks. If you can borrow for cheap and make a good return off these companies, then all is well. But what happens when those tech stocks suddenly start to devalue, when suddenly the Japanese yen turns around and starts to strengthen and interest rates in Japan start to move towards the upside? All of the different parts of that trade start to unwind, and suddenly people desperately get out of those leveraged positions they have in the US. That's why we've got this linkage between what the Bank of Japan do and what's happening over in the US in particular.
OK, well, let's just turn to the US. European stocks have steadied. We'd show the FTSE there. US futures point to a modest rebound in New York. What's your prediction then for when markets open on Wall Street?
I think they're probably going to follow the Japanese markets higher, not to the same extent, of course. I don't think we're going to see a 10% rise over in the US. So some reprieve to that selling pressure for the time being. There's, of course, some concerns over in the US about what has happened in terms of Friday's jobs report. We saw weakness in terms of the payrolls number, a rise in terms of unemployment, claims that we could be moving towards a recession. But we did actually start the week with a stronger than expected services PMI number yesterday. Of course, services absolutely key to the US economy, and that did allay some of those recession fears. So hopefully we will have a little bit more of a calm and more optimistic day today. But it does feel like what happens in Japan is going to lead into Europe and the US. So probably going to see some upside for US markets, but there's going to be some jitters as people are concerned about the US economy, but also what's going to happen tomorrow in Japan.
Okay, Josh, please keep your diary free tomorrow. We might need to get you back in again. Joshua Mahoney from Scope Markets. Thanks for joining us.